Curious about trends that you're seeing in health tech VC funding. The market implications on founders. Can you share a little bit about current trends and what you see the future to be?
What we've seen over the last 2 years is many different changes. Most notably, there's been a large protraction in the health tech market over the last 2 years, right? So valuations of companies have continued to come down dramatically from what was the 2021 post-COVID highs. The pace of capital that's being deployed from venture capital firms and private equity has really slowed down. We're starting to see some of that come back online, but it's really slowed over the last few years. There's been an increased focus on building profitably and very profit oriented in terms of where venture capitalists are making their investments as well. They want to see that progression and focus on building things profitably as opposed to the growth at all costs and maybe recklessness of how they've used the cash over time. And then, on the founder side and on the company side, we've encouraged and continue to see, dramatic cuts in costs for companies to extend their runway. So maybe a company was looking at, 12 months of cash in the bank and have exercised different ways to cut costs to extend that to 18 or 24 months to get through this kind of turbulence in the market. Companies have continued to make those costs, and we're starting to see kind of what's coming out on the other side of the last 2 years of that happening. And as I say that, now we're starting to see a lot of that rebounding period right now in the moment. Companies that have endured the really hard few years are focusing on getting back to growth in a tempered way. And so I think, what that might mean for founders, and if you're looking to raise venture funding, if you're on the earliest stage, pre-seed or seed, you've likely seen a little less impact there than the later stages. Overall, it's still slowed down a decent bit, but a little less so. Companies also, and firms like Flare, will continue to do more diligence in the early phase than they did before. So I think the question around how long does that take, you're likely to see kind of early stage diligence take a little bit longer. People are being more careful and more, detailed in their diligence. At the later stages, as you move to seed and Series A, you'll want to see, we as a VC will want to see at least 6 months of very focused growth. And rounds that are being raised at those stages have a much higher bar now than they did maybe 12, 24 months ago to get that funding. And so some of the implications you've seen there is, if you look at the data, there's unlabeled rounds, and happy to talk about kind of what that means. Where the existing investors maybe provide additional, capital to help get them through the next few months, 12, 18 months to get through and weather the storm. But that bar has been set much higher for later stages. So if you're, considering a fundraise, expect those processes to take a little bit longer. And then on the flip side of that too, if you're focused on bringing a net new technology to the market, like generative AI, investors are very eager to see what founders are doing and how they're introducing these new technologies to build things that just weren't possible 12 months ago, 24 months ago.